Hello. When we invest, we get more return. And there are possibility that we get lesser interest loans, and people think that in equity market people are getting, let's say, 10% and above. There are cases that 15 and 20% are getting it, especially last 1 year. Market has given good return and everyone is confident about investing in stock market. In that case, most of the NRIs, they get loans at very lower rate, let's say 4%. So they think that I get loan from my wherever I'm living now, and I get loan for 4%. Why don't I take that loan and bulk money invest in India? In that case, I will earn, let's say, 10%. In that case itself, I'm earning big chunk of money. In this case, when we have studied that how it works and what is the kind of risk as an investor they are taking, and what is an alternate or what is the best way to invest. So this is a more of a case study. This is something which, when we calculate it, what is the best option people can do when they think about investing money, especially leveraged investing, especially people are taking loan and investing, how they can manage their investment with minimal risk and the same time they are earning a better return. So the scenario is that, let's say that a person is taking a loan for 20 lakh rupees and the interest he has to pay for this loan is 4%. So they are thinking that it's a brilliant deal and they have to pay that in 5 years' time. And with that, EMI will come. So for 4%, if they are taking it, they have to pay about 36,000 rupees, 38,000 rupees they have to pay as a loan. And mostly these questions are come from NRIs. So NRIs are getting a lower rate loan, and there is a possibility that currency rate goes up and down. I'm not considering that. But in this case, 20 lakh rupees they have taken and their plan is to invest this money in India, and they are planning to invest in stock market. Stock market is giving a return. Sometimes it's up, sometimes it's down, but these days in last couple of years market has given a pretty, especially last year, given a good return, so people are confident. So in this case they are assuming that if I invest this 20 lakh rupees in India for 5 years, I will invest. Okay, so I'm not considering like a 20% or 15% return. I'm thinking that let's say 10% return they are getting for 5 years. In that case itself, this investment will become about 32 lakh rupees. So 20 lakh will become 32 lakh rupees. And in this case, what is the expense a person has to bear? So 20 lakh rupees, 5 years when they pay with this EMI, about 2 lakh plus they are paying as an interest, which means the cost of this fund is about 22 lakh rupees. Including interest, 22 lakh rupees they are investing and they are getting about 32 lakh rupees. And when we are investing in market, if they are getting 10% growth, and when we are investing in market, what happens? Stock market, it won't go like this, like a FD, it won't go like this. Always it's not like that. Stock market is always like this. So just imagine that, you are after 5 years, if the market is, let's say, it gone up here and it comes down here, which means your growth may not be that good, or sometimes that after 5 years time you are sitting with a lower than what you have invested. There are possibility that from the capital it can go down to 30% or 40%. But do you have that capacity to hold it? So that is the biggest trouble when we are taking the leveraged and investing it, and you get tension also. And just imagine this 5 years is a risk. 5 years you have a liability to pay this much EMI on a regular basis. In this case, for example, you are reaching a level that you are losing a job, or you are not in a position to pay that EMI, which means you are taking the big risk of this 20 lakh rupees. And here in that same period, this investment is not giving positive return. Stock market is down and you are not getting enough return, and this money is not going as expected. In that case, you are actually speaking taking a big risk of this 20 lakh rupees. Why you want to take that risk? It's always advised that don't invest with money which you have borrowed. Yes, you take home loans, but when it comes to investing in equity market, don't think that loan is just 4%. I'm getting 10%, 15% return. But in equity market goes up and down. There are possibilities that your fund can go to 20% down also. In that time, you may have to close that account. You are in trouble. If you do not have additional money to pay off that loan, you will be in trouble. So in this case, don't ever think that from here income will come, that money I will pay for EMI. Don't do that. If you have and when you take this loan, the risk which you are carrying is that if your income, job, everything going well, you will pay this independently. You don't have any trouble. But in urgent case, within 5 years time, you have to repay, close the entire outstanding loan, and your investment which you have done here is not doing good, you will take a big hit. That time you end up getting into big debt and everything. So this kind of scenario, why you want to get into that? What is the alternate for this? The alternate is that anyway you are committed to pay this much of money, 38,000 rupees. This money you pay, you invest monthly into, you can invest in stocks, or you can, if you have preferred stock, you can invest in preferred stock or mutual fund. Both, if you want to automate it, EMI means automatically bank will deduct. Same way, SIP can automate and take the money out of your bank and invest this money. So if this 38,000 rupees invested, 38 point, whatever this money is invested for 5 years, that money will grow to about 28 lakh rupees, 28 plus at 10%. If you are getting more than 10%, your investment can get more than this. Here, if you look at it, by doing all these things, you are earning, let's say that 10 lakh rupees profit, because here 20 lakh cost is coming to 22 lakh, and it at 10% you are getting about 32 lakh rupees, but 10 lakh is the profit. Here, whatever money you are investing, you are getting this much money, but this one, you don't have any risk of debt. You don't have to worry. It's a tension-free money. So instead of going for a loan and that bulk money investing in market, if you can use in a second method, this is the second method, this is the first method. Second method, it's a tension-free and you are not taking any risk. And let's say that in 1 month, you are not in a position to invest that money. It's okay. If you are not paying the EMI, interest will double up. But here, that month is not invested, that's all. You don't have any lapse, or like insurance, you don't have any lapse or anything. Here, you have the freedom. Sometimes, if you want to invest in land or big piece of land or a property or a flat, that time you have to pay bulk money. So if you go for home loan, you have to pay, let's say that 7% rate and you are getting for 4%. That may be making sense. But if you want to invest in stock market, mutual fund, and for that you need to take loan, it may not make sense. It makes sense, but you are taking unnecessary risk. Why you want to do that? If you have an option to take invest with less risk, tension-free, you may able to choose the second method. I think by doing this, you will create wealth and at the same time, you will enjoy your life also. Hope this video make sense for your investment. In case if you are a person who thinking that why don't I borrow some money with a lower interest and invest somewhere else for a higher return, this will be a good solution. If you have any questions regarding this, you may call up or email to us. Happy to help. Thank you.